Hey guys, welcome back. Hope you had a good week in the market. Friday, June 10th. We're gonna look at SPY. What a melt off today. Gap down, flat. GME is green as of right now. I've got about an hour. It's power hour. GME is green, almost 2%. SPY's down 2.15%. Sub up, like up, comment down. Happy money sticks around. We're gonna look at we're gonna compare Volkswagen squeeze and the market then compared to GME. It's kind of interesting. There's our Twitter at HappyMoneyYT. We have a Discord server as well where I'm going to be referencing some pictures I put on here. So CPI came out. It was awful, worse than anybody, even the worst expectations. 8.6, I think it was, and I think the worst expectations were 8.5. Most of them are like 8.4, 8.3%. So yeah, it wasn't a whole inflation's bad, let's rip type of scenario. Is inflation's really bad. So I didn't quite take my own advice, because I said in yesterday's video, or maybe it was the day before, I said if this starts to break down and break these lows, that's setting the trend. I kind of thought, since it was before CPI, that it wouldn't necessarily be the trend to continue. So it was, though. If you followed that advice, you probably did pretty well with SPY, because the floor here that I was talking about, the support, was 406. It broke that yesterday and then closed at 401. $6 move there, and then gap down to 388 was the low. 389 was low today. So huge percent gainers could have been made on SPY. Went the right way on that. I went the wrong way. It gapped down. I'm like, this is pricing in CPI. It's probably going to be bad, but it'll rip because it's, you know, people are already pricing it in. But whatever, it went the other way. But what's interesting is how GME held up so well today, and it looks like it's starting to build a head and shoulders. A little too soon to tell on the hourly here, but we do have here is a hidden RSI divergence from right here to right here, and then this RSI is higher than this one. So lower RSI here, higher floor, lower floor, higher RSI. So it's going up, this is going down, diverging there, as well as the MACD is also kind of diverging there. But then we have divergences on the other side too, not quite as strong as that one, but we have this one on the peak and then back here. This bottom one though is a more defined divergence, I would say. So that's bullish. And the fact that we kind of have one bearish means it's maybe just going to kind of consolidate, which is crazy. I'm not sure. It's holding up really well. So somewhat uncharted, I feel like. I'm not sure if we're going to come way back down anymore before we rally. 4 hour did cross bearish on the momentum here on the MACD. We do have red under the 9. A little bit of a bear flag. I do have downside exposure, so kind of expecting it to come down more, but it's the strength and the amount that's being held up is really impressive. Right at this support too. It's kind of what I was talking about in the other video. If we kind of get these small candles right in this range, that might be it. And we kind of did, actually. My bearishness on GME, I should maybe close it out today, or maybe even early next week, maybe like Monday. Just because this thing looks like it wants to hang up at a high level. This big double doji candle, as well as it's just a small body right at that support. So I don't know, it's kind of crazy. GME is really acting as the hedge here on the market. I mean, the market, it's awful day on the market. And that brings me to SPY and how I had a video recently. I said GME equals SPY, and it trades with SPY, and it does. It trades up and down with SPY. And you can kind of even spot when GME will do what, depending on that, especially this year. However, its moves that it's doing are larger. However, it's not just larger, it's only larger to the upside. So I was thinking about it in my head, and I was thinking back to the Volkswagen squeeze in the charts, and I was remembering the chart on Volkswagen, and I'm like, the chart on Volkswagen, Volkswagen was going up all until the dip and then the squeeze, and like we've all seen that chart. And then I was like, but wait, it was going up that whole time. That was like a year of time, and SPY was coming down. That was all bear market for SPY. So I went back and looked at it. here's my little write-up today. Looking at the Volkswagen squeeze and SPY, it slowly diverged from SPY when SPY went bearish in October 2007. So that's basically SPY's peak to when it turned bearish right here. The momentum stopped and started going bearish, bear market. This took about a year before we had the crash in 2008. Volkswagen would basically come down less when SPY would, and then rally higher when SPY would rally. So sounds a little familiar, huh? SPY trending down while Volkswagen trending up. So overall, you can see here, and I'll blow this up, but up until the squeeze when SPY crashed and Volkswagen crashed with it, and then on that bear market rally at the bottom, VW had its peak of its squeeze. So we'll pull it up on the bigger chart maybe, but these are weekly candles, and I think this time frame's pretty close, but we can look at it on here. Yeah, here's 2007. Here's 2007. So you can see this is Volkswagen, this is SPY. Volkswagen was trending up that whole time from here to here. This is all Volkswagen trending up, given the rallies were during these rallies. So this rally and this rally, I think, are like here and here, or maybe here and here. And then the downs are also here, but the downs aren't as far down as the SPY, and the ups are much higher. So the trend is just different. It's going up, even though it's following it. And then finally, you get the down with SPY, which was this one, that massive crash that happened like 2 weeks, 3 weeks. You have that, and then on one of these weekly bear market rally candles, you have Volkswagen squeeze. Given there's definitely different stuff at play with Volkswagen squeeze, VW squeeze, but seeing this and remembering Volkswagen started to diverge from this bear market rally, and just looking kind of at more of a macro level at it. See what's happening here with GME, starting to see divergence since January peak on SPY. GME has held up much better, and on the lows not dropped as much as SPY, and on the rallies rallied much higher, indicating its divergence from SPY similar to Volkswagen 2008. Yeah, so here's that same. These are daily candles, not weekly, but this is basically the peak on SPY in January 2021, and this is January 2021 right here. So they're both coming down. And on these bear market rallies, GME is rallying higher. And then SPY is coming down, setting a lower low. GME, kind of a lower low, but not much. And then this bear market rally ripped GME way higher. And then SPY is coming down, long time down. And even the little macro, or the micro, you can see it. And this is what I'm saying when it's following SPY. Coming down, consolidating, coming down, consolidating, coming down, consolidating, coming down, consolidating. It's all there. And then this little bear market rally we just kind of went through. Look at this, it's ripping up. And this was actually a higher low than that, where this low on SPY was here and here, this one was here and here. So you're starting to see it diverge from SPY. And I'm not sure if it'll continue to diverge and play out how Volkswagen did. If it does, this is going to be a long time frame before we get that peak squeeze like we did on Volkswagen. That said, this will keep grinding up in basically share price as the market keeps coming down. That's kind of the way I see it. So I'll throw it back here so you can kind of see just visually what I'm talking about. And then Volkswagen's ticker, it's kind of hard to find. They've changed it. I mean, it's at least on Webull here, it's like there's like multiple different tickers, and since it's on, I think, German exchange, set that to name A to Z and then V. Where is it on here? There it is. VLKAF is how I can get it on Webull. So if you guys are on Webull and looking for it, or if you're brokerage, you can't find it. This is also crazy how Volkswagen basically had another squeeze. We won't talk about that, but that just happened. Yeah, what's going on there? That's COVID crash. Yeah, anyways. So come back here. So weekly candles, this is what I was showing you on that little chart. So you can see Volkswagen, this was all during this bear market. Volkswagen was coming up, and on these kind of consolidations that were kind of coming down, that was these. So let's see, that's 522. Where's that on here? It's right around here. So right here started coming down. 427, 419. Kind of front run it a little bit. And then this rally up to 10.8. Wait, that's the wrong year. That's 2008, my bad. Yeah, back here. So 2007, because the peak on this was October 2007. So if you're looking from there on, that's basically what I was trying to look at. I was trying to show you. It's hard with these little ticks, but these are weekly. So coming down with it and then rally, but making higher lows and higher highs, and SPY's making lower lows and lower highs until eventually we get this crazy move, which is this. And then the peak 1031, it's this green candle right here. So every rally on Volkswagen as it was grinding up was a bear market rally, and then the downtrend's making lower lows on the SPY. Volkswagen was coming down, but it was more just coming down a little bit and consolidating more or less. So with that, we've seen it kind of on a micro level a little bit. Even today was somewhat of an example. SPY just kind of kept selling off, and GME basically held flat. Not like a full-on inverse, but a divergence, I would say. So then here it is on GME, basically. You start it in like January, which is where the SPY had its peak, January 4, so it's right like here. Volatile time. If you look at it kind of like that, coming down, rally, coming down, rally. We have the same thing, but we're starting to set higher lows and I think higher highs. I think our trend's going to start getting higher. And this uncharted territory right now is kind of interesting. It's very interesting. Actually, just noticing now the RSI here is higher than here, which is good since this is higher. So there's no divergence there. That's all kosher. Yeah, so looking at it like that, I mean, we might be in slowly making higher tiers of price until we finally get a squeeze. This might be playing out a lot longer. Maybe, who knows? Who knows? That could be a while. But at any rate, very simply, GME so far is a pretty good hedge to the market. Outperformed many of the big blue chip and safe stocks, safe growth stocks, I guess, if there is such a thing, since start of the year. So I'm stoked on that investment. Didn't get anything on 6ix9ine, no announcements or anything. GME did have a filing, I think basically allocating 8 million shares that they will give to insiders at some point, probably after the split. So yeah, and they've already got that done. So I think their split announcement, they're probably waiting for a rip, June OPEX, a rollover, whatever it is, 200, 250. I don't know where it's going to go, but I'm assuming a split at that point. Might not be a 10 or 7 for 1. Might only be like a 2 or 3 for 1. Because why do they only have to do one split? They have 1 billion shares. Why not do one split now, and then once it rallies back up to that 200 after it's 2 for 1 split, do another one and just, stretch it out over time and just keep that share price at a nice spot. Once it's in the thousands or even 1,000, it's going to be like, it's going to be hard to have a lot of buying pressure from retail sentiment at least. So kind of split it over and over. I pulled up Tesla because Tesla did that same thing. So if you just looked at this chart like this, there were splits through here. So, $100, it wasn't $100 here. It was like $600 here at a split. And then it's, well, they did a 5 for 1. So it's like 500, then 100. And it rips up and they do another split. And so that's how you get crazy big moves. It has to split in there. So GME might just do multiple splits, which is good. It needs to be high enough I heard, I'm not sure if it's true, but I heard institutions don't usually buy stocks under $15 a share price. I don't know why that would be, but I heard that is a thing. And you don't want it too expensive, so there's a nice range for it, and so I think a multiple split could be the case. Anyways, here we are. We're at 1:30. We've got 45 minutes to close. I didn't do a whole lot today. I did have some bearish plays, and they have worked out for the most part. I rolled over my cash secured puts on my margin account. I was able to roll them to 140 strike for next week. See, I should have rolled it sooner, so I'm getting kind of trying to learn when the best to roll. I know when the best to close, the best to open, but doing it in one transaction, it seems like if you open the play like I did, and then it starts to get away from you right away, kind of to roll it sooner, even if you're adding more time to it, which is it's kind of unusual. It's not what I would imagine. But I opened this play, I think this day. I opened it at I opened a 143 put, and then it started to drop. And I started looking at them right away, and I think I could roll it to the next week for like 137 for a credit. And I was like, I'm gonna wait. You know, it might rally or whatever. And then it didn't, and I kept looking at it, and slowly but surely my strike had to come up higher. So not sure if that's always the case, but I know it cuts off over here. Sorry guys. But this is a GME 140 put, so it's still out of the money, but GME's kind of holding up. So I'm not too concerned. I'll continue to roll it down as necessary. And then on this theta farming account, I rolled these. So I had a, let's see, we had a 133 covered call that is basically just out of the money. I rolled it to, or no, sorry, it was a 148 covered call today that I rolled next week to 133. So pretty aggressive. I'm still bearish, but I'm not sure. I might have to, this might need to be rolled up next week. And then my cash secured put at 132, I was able to roll down to 116 for credit. So that's a big roll, which is nice. Still setting up my rolls somewhat bearish, but it's not, I mean, it's not necessarily going to drop that low. It's still somewhat undecided to me. Still somewhat undecided, so maybe just more consolidation. And then on E-Trade here, oh, I got assigned on birds. I had no idea. Wow, that was really early, wasn't it? July 15th? What the heck? Okay, well, I got 400 more shares of birds. I bought a Novax put for next week, 39 put, and I don't know what this stuff is. Put credit spread? Maybe. Yeah, call credit spreads in here. So here's this one call credit spread. This will expire soon. 418 on that one, profit. I have a minimum order to buy to close it. This one, 130, 132 is just hanging on the edge. E-Trade hasn't closed it yet, which is nice. Break even on it's 130.75, so it's at 130.63. If it seems like it's gonna expire in the money, I'll roll this next week. Probably the same strike. And then I opened up a couple bearish plays for next week. 121, 125. Is this a debit spread? Yeah, it's a debit spread. And then opened up a 127, 132 call credit spread. So this is a bigger one, 741 on that. It's a little more aggressive. I think if we do come down, I think we probably will come down next week, but I'm not sure if the end of the week will be that low. So I might close these out midweek. Wednesday, I think Powell speaks, so could have a market rally then. This is my long exposure so far. I'm scaling into it. 170, 195 call debit spread for July 1. This thing hasn't really lost value. It's only down 12%. At one point it was up a little bit today, so premiums are kind of hanging out up high, and that might be part of their strategy. And then I've also got this 490, 500 call debit spread for July monthlies. Yeah. Spy call didn't work out. Meh. And that's what I got for you guys. See you on Discord. Thanks for watching. Peace out.